Hey, good afternoon, everyone, and welcome to the PivotBoss Closing Report. I am Frank Ochoa, aka Pivot Boss, with analysis after the current session's trading day, January 13th, 2016. What we're looking at here is the daily time frame of the ES. And what's important here is we had a major rejection of the highs above those previous session highs here. And once those were rejected, price basically had a big time meltdown and broke below two-day lows, reaching our 1879 target. Now, if you recall back at the beginning of the year here, I mentioned if price could not hold above that 1981 half composite low volume node there, the implication would be a downward price discovery phase into the two targets, 1935 and 1879s. And today's the day that 1879 were reached. So that was a primary idea once this 1991 failed to hold. So early on, well, we talked about the first trading day of the year is once price came into here, look for bulls to come in and defend 1981's first shot at seeing a return to 72. There was a 30 handle bounce there. I said that's enough to get to break even. If price comes back into 1991's, look for bulls to defend. But any failure to hold 91 after that opens up a run of the stops, in which case these downside targets would then be the primary objectives, 1935, 1879, both of them reached. So that's how that played out to begin the year so far. Very nice according to our analysis. Now coming up here, we got to see how this thing plays out because obviously I mentioned before that any bounce was likely to be a selling opportunity for another wave of weakness. The next major downside targets to play to here are going to be the 1853 half level, and then you also have 1814s. So the 1853s can be reached this week with an expansion week, but it'd probably be another week or two before we see 1814s. So keep that in mind. The next key downside targets here, 1853 half, 1814. All right, taking a look at the intraday time frame for the ES. One thing I wanted to mention here was here's the key level I gave you to begin the session, 1932 half. That was the previous session's open. Bulls were looking to defend that level. I mentioned any failure to hold that level would suggest a move back down into 1908. And we saw that move this morning. You see how price went offered through it, came back, retested it from below. That was also offered. Price dropped into 1908s. And then from there, further continued into the 50% expansion target for the session, which is 1878s. So a major move, all because of the failure to hold above that 1932 half, our key level this morning. All right, let's take a look at crude oil. Here's crude oil, obviously continuing to trend lower here. We have basically an inside session or inside day that formed, whereby the price the high and the low, that range fell inside the price range from the previous session. That inside day implies digestion and coiling and can usually, basically pave the way for expansion ahead regardless of direction. So right now, bears have control of 32.10s. First shot at seeing a continuation into 28.91. If you recall, 28.91 is our next downside target based off of the key range from back before. Now, any push above 32s would suggest acceptance. That would likely lead to a retest of composite value at 36.88. All right, taking a look now at the intraday time frame for crude oil. Just a moment. You can see that inside day and what it looks like when you drill down inside the chart here. So here's price just kind of coiling up. Here's the inside day, inside the boundaries of this day. Very nice, tightly coiled range. This could lead to significant expansion soon, so watch it very closely. All right, taking a look at gold now. Here's gold. We were talking about looking for a potential bounce opportunity. We talked about this saucer bottom here and how price pulls back into 77.90 or 10.72s. That could offer an opportunity for bulls to defend and seek the next highest targets, which we have at 23.80 and 11.30. with a shot to see 47 and 69 over the course of the next month plus. So this is a very solid spot here. Defending here implies continued strength into these upside targets. Now, failure to hold above 77.90 opens up a potential retest back toward lows at 10.50. All right, taking a look at the intraday time frame for gold just a moment here. One thing we talked about in the intraday chart in the pre-market was to watch these bit of traders right here. I mentioned if bulls could keep prices below 83s, the implication would be continued weakness. But I said watch them, because if these sellers here get trapped and price pops back above 83, there could be a short squeeze all the way back into 1092 and perhaps 5-day value at 1100. Price did see a nice short squeeze after these traders became trapped, and as a matter of fact, that was a nice move here from 83 up to 95. That's 12 handles, quite a bit of chunk of change there, $1,200 contract there, so very nice. Now taking a look at the NQ lastly here, very solid rejection of price levels above 43.50. I talked about before there being an area right here at about 43.75 where bears want to keep that area defended for a shot at seeing a continuation lower. We finally reached our 100% expansion target at 41.74. That was off the 44.49, so very similar to the ES I mentioned. Failure to hold 44.49, targets 43.11.5 and 41.74 to the downside, and you can see we've reached both of those targets now on that move. I would say now that any bounce into 42.55 offers an opportunity for bears to defend for a continuation lower into 4100. The next downside key levels that we have on the books here are going to be 40.59 and then 38.93. So we have a ways to go here, especially if price can't get back above 42.55. All right, taking a look at the intraday time frame just briefly here, you can see very similar to the ES. Failed range expansion is one of the most important topics in all of trading. Here you have the previous session's high price. Price attempted to hold above that zone and then failed. That failed range expansion led to a move across the range into the previous session's low price, and that is typically what you would see. Once price went offered through there, we saw a move into our next downside key levels, 42.26 and 41.74, which we've had since the beginning of the week. So very important movement here. Overall, I would say bounces into 42.26 offer short-term selling opportunities. Above 42.26 opens up a return to 5-day value at 43.13. All right, a nice long-winded post here, but hopefully it gives you great analysis. That's all for now. Let's see how it plays out the rest of the week. Good luck and trade well.